Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO Founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Alan Scharfstein, President and Founder of the DAK Group, about what middle market executives should look for in the coming year regarding the economy, economic growth, and government policy.
I guess to start out with, what's the economy? The economy seems to be going really, really well, at least here in the U.S. Seems to be trickling off a little bit in the rest of the world, which is interesting. Do you see that? I mean, there seems to be kind of a mixture of the economists are sort of saying, there's a mixture. Everyone thinks there's going to be growth, but the range of growth seems to be pretty broad. What are your thoughts on that?
Yeah. Actually, what we're hearing from our clients, which is usually a great predictor of these things, is that they are very bullish on 2015. They see their backlog, their information they're getting from their customers is indicating a significant amount of strength in the economy. They think that the dollar's strength is actually going to help their businesses. But we're seeing the same thing in Europe. We're seeing the same thing that you just talked about in Europe and Asia, which basically means that their economies are hesitating a bit. There seems to be less consistency of the economy and less confidence in terms of what's going to happen in those markets.
Right. Yeah, I've noticed that. It's a really fascinating thing that suddenly. The U.S., even including the emerging markets, the so-called emerging markets, suddenly the U.S. seems to be the juggernaut again, which is great.
It's really
a little bit surprising.
Yeah, I guess there are a few things that are probably helping us get there. Clearly, our energy-based economy, or the economy where energy is becoming a more important part of the overall economic outlook in the U.S. and energy independence appears to be here is helping our situation considerably. Sure. We've had several instances in the last year where European companies, especially those including those based in Germany and the Scandinavian countries and in the UK, are all looking to purchase U.S. companies and move a considerable portion of their manufacturing capabilities to the United States because they view us as being a relatively safe place, a low cost of energy location, a relatively low cost of labor location, are coming out of this, the recession faster and better than they are. And sure. The fact that they can move their manufacturing here without the same concerns relative to their IP and technology that they would have if they were to try to shift that to the lower cost manufacturing locations of China and elsewhere in Asia. So put all those things together, we're seeing some fascinating trends in terms of European, especially Eurozone, companies trying to buy businesses in the U.S. and use the U.S. as a base of manufacturing.
Boy, it's funny how the world changes, isn't it?
Yeah.
It really turns on a dime, right? Our manufacturing is dead. Long live manufacturing in the U.S., right?
That's right. All those mothballed plants in the Midwest. It's a really interesting opportunity, and I think. But one of our challenges there is, do we have a workforce that is sufficiently flexible and appropriately trained for the new types of jobs or the old types of jobs that are coming back into our country?
And that's it's very, very interesting you mentioned that because I talk to a lot of folks, and I talk to a lot of the Deloittes of the world and the PwCs of the world and those guys. And, I talk to them about their middle market clients and the surveys and all that good stuff. And, boy, there is a consistent theme. And that consistent theme, there may be variations on a whole bunch of different issues, but there is one absolutely lead pipe cinch that I keep hearing, and that is, where are all the qualified workers? It's worrisome. Because there just doesn't seem to be, even though we have, the unemployment rate's going down, but the labor participation rate is anemic, and there are these companies that are just dying to get qualified workers to do. It's sort of across the board. It's not just STEM jobs, and it's not just skilled labor. I mean, it's across the board, and you really wonder about that. In terms of it's almost an indictment of our system in the sense that we can't seem to produce qualified workers anymore. It's a real problem. It is.
I mean, real problem because when you take a look and we see the same thing. We talk to our clients about what their single biggest issue is. It's very often acquiring qualified workers. But then we read elsewhere that there is unemployment, and there are people who have been out of work forever looking for jobs, and the two of them just don't seem to be able to match up. So it seems as though there is a huge opportunity here if we can create some sort of efficiency in the system, which is not there at the moment.
Yeah, and it's not a quick thing to fix, it seems to me. But yeah, interesting. Okay, so moving a little bit more into your field of expertise, the middle market M&A market. I mean, obviously there seems to have been a pretty healthy uptick here in 2014, the long anticipated uptick. How do you see that going in 2015?
Well, based upon the pipeline that we're looking at and the plans that we're talking to our clients about, we see 2015 being likely to be stronger than the already strong 2014. Probably several reasons for that. One is that we're seeing that the middle market businesses are just more nimble, more flexible, more entrepreneurial. They're taking shares from larger companies. And as a result of that, they're able to command value, and we're seeing a lot of interest of larger companies who wish to acquire middle market businesses. So that is trend number one. But we're seeing some pitfalls in that also, because many of these larger companies are still learning how to acquire and integrate these smaller businesses with different cultures, more entrepreneurial businesses into their corporations while still retaining the parts of this business, the culture of this business that have made them so successful and have made them great competitors in these marketplaces. So those are lessons that I think have been learned more quickly by private equity groups who have acquired these middle market businesses, but not necessarily learned by the strategic purchasers who are anxious and active participants in this middle market.
Yeah. It's such an overlooked thing, isn't it? Because so often everyone focuses on numbers, or even sort of strategic, these huge strategic objectives and things like that. But gosh, at least in my experience, and mine's not nearly as great as yours, but the observations that I've seen is the culture and the integration process is really the most important thing in terms of a successful acquisition. Because if you can't get that right, everything else sort of falls by the wayside.
Yeah, I think that goes to the old adage that getting the deal done is the easiest part of the equation. Making the deal successful is the most complex and difficult part. And the companies that are truly good at doing acquisitions are the ones who not only can get a deal done, but then know how to make it successful after they've done the deal.
Yeah, absolutely. Yeah, it's interesting. Are there any particular sectors of the economy, at least in particularly with respect to the middle market, that you think are really attractive for M&A in 2015, sort of the hot sectors?
Yeah, I think what we take a look at in terms of hot sectors for 2015 are those businesses related to creating medical efficiency, medical support, medical efficiency. So as we look at the medical markets, we've known that medical devices, pharma, and the like have been very, very hot in the last couple of years, but we see a lot more emphasis this year on those electronic medical records companies that are helping doctors create and helping institutions create more efficiency in the delivery of medical services. We see that also some strength in business services and also in the logistics space, where we see some very significant interest in getting product to market, getting products to consumers in a more efficient way, which allows businesses to minimize inventory and do other things that, again, make their operations more successful and more efficient.
But it sounds like a great 2015 economically, M&A for the middle market. So what are the black swans in the horizon? What are the pitfalls that we should maybe be looking for?
I would think that the big pitfalls that we have to be concerned about, a lot of them have to do with the gridlock in Washington, the inability to get efficient tax laws or tax policies in place, our inability to keep the corporations, the American corporations, in the United States and keep their profits here. It seems to be everybody knows what should be done, but we just have an inability to get it done. And if we can't find a way of freeing ourselves from some of these truly burdensome and inefficient tax laws, I think it's going to be really tough for us to continue to be not only be a leader in the global economy, but also be able to attract the type of businesses to the United States and the type of talent to the United States that we want to continue to attract.
Yeah. So are you optimistic about that in 2015? I mean, obviously, we got a new Congress. We've got a continuing Democratic president, both of whom have widely disparate ideological views. Do you sense any momentum on that in that regard, or do you think it's going to have to wait till 2016?
Well, I am an optimist, so I will tell you that I am hopeful that the pure economic reality that everybody knows we are facing with our tax laws will drive some change. I am not convinced, and I don't see a clear path for us to address the issues related to the special interest groups who are driving so much of our tax policy and have taken it in such varying courses that I can't say I'm optimistic that we have found a way to rein in special interest groups.
It's interesting, Alan. This has particular relevance to middle market companies, it seems to me, and I've said this before, but the middle market companies tend to get squeezed in these kind of things because, as you point out, the special interests. You've got the chamber, the U.S. Chamber of Commerce, and they typically represent, broadly defined, they represent the large companies. And of course, you've got the NFIB, and you've got all kinds of folks that are intensely, supporting and lobbying for the small companies. There really is no voice for the middle market guys, and that's true in terms of regulations, in terms of tax policy. The simple example is always, the employee ceiling. A ton of these regulations don't relate to companies that have 25 or less employees, which may make economic sense, but the problem is the large companies also have all these exemptions, which typically don't show up in the light of day because they've got lobbyists who are there constantly. And the middle market guys are the ones who get whacked. Am I delusional in that, or do you see that as well?
I think you're very much on target there, Paul. I think that is one of the challenges that exist. And again, there is no cohesive group, even though middle market companies are the driving force in our economy. And when you listen to when politicians from both sides of the aisle speak about that, they both are very, very vocal in the fact that encouraging and supporting middle market businesses and entrepreneurial businesses is the key to growing our economy. On the other hand, their policies are very much skewed towards those who have the greatest political influence, who are not the smaller companies or the middle market companies of this world.
Yeah. It's a strange dichotomy. It's a third of the economy, and yet they just seem to have no voice. It's interesting. Well, I guess we'll see. Okay, so ending on a positive note, I mean, what's new for your firm? What's new for the DAK Group next year? How are things looking?
Things are looking terrific. Pipeline is strong. Lots of interest in various types of activities. If we were to take a look at what we're talking to businesses about in 2015 and 2014, but really going to 2015, it really has to do with putting an increased emphasis on pre-transaction planning. What we're finding is businesses have to be prepared to be opportunistic. There is fast-moving money in these various markets. There are fast-moving companies interested in doing acquisitions. And what we're really talking to business owners about is the fact that opportunity can strike at any moment. And so you really have to be prepared for that and have your business prepared for that. So the worst thing in the world for a closely held business is for the right acquirer, partner, joint venture partner to come to the table, and you're not quite ready to be able to take full advantage of that opportunity. And
right.
So we are very much talking to businesses about getting themselves ready, doing the type of planning that will allow them to maximize their long-term value. Whether or not they choose to execute on that becomes their choice. But they have the choice and the ability to absolutely maximize the value of their business in 2015. The other thing that I think is absolutely apparent is that we're having a great run right now in terms of business performance. We have a great run-up in terms of value. We have almost a perfect storm in terms of interest in acquiring middle-market businesses. The question that we also are challenging business owners about is now really the right time to be looking to possibly take some money off the table, possibly sell a business, possibly take the steps to make sure that you do not miss this opportunity. And there was a quote, and I think it was Commodore Vanderbilt. You may know better than I do, but when someone asked him how he made all his money, he said, "I sold every one of my businesses too early." I want to make sure that business owners don't make that mistake or this time around.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.